Good morning, traders. Russell Sandiford here for your Easy Markets Monday morning market rant. Well, just to tie off last week, a really sort of middle of the road or middle of the fairway type of non-farm payroll release. The three metrics that are always important for those of you that are new to trading and not quite understanding why it's so much of an impact there from this US dollar data. It is a very big metric every month, once a month, normally the first Friday of the month. The non-farm payrolls, three components is the new jobs added. Now on Friday for the US, that was pretty good. It was about 228,000 new jobs added, above the estimates around 185. So pretty middle of the road, not ridiculously heavy and good, but enough to spur some optimism into that US dollar story. Now the unemployment rate held, that's the second metric. The US unemployment rate held at 4.1%. Again, that's middle of the road. It could have gone either way and ticked slightly better, but that's fine. And the third metric is a big one, which is the wage growth. Now that was at 0.3. So that was projected at 0.3. It actually missed the estimates. So they're the three metrics that come out every month. If you are trading that news, it is always high impact, of course. Now, just to recap what happened. So dollar yen reflects it nicely here, where it moved from around that 113.50 level back about 45 pips. So very, very mild stuff, which is what I was saying. Shouldn't be too wild. So it shrugged down to 13.5 or 13.10. And then it's come straight back to finish off last week in the US session there on Friday. So basically, that's your story from the finish of last week. We saw a small blip down in the US dollar, which is why you saw a small tick up in gold, for example. And then it went resuming that normal trend. So what is important today, traders? It's your Monday. Bitcoin futures start trading in about 30 minutes from now at 10 a.m. Sydney. So be aware of that if you are trading Bitcoin. That may produce or see some extra volatility. Over the weekend, Bitcoin, after a very, very big bullish week last week, did pull down in weekend close and basically got down to around 13,200 or thereabouts. So a pretty big pullback. But also in weekend trade throughout Sunday, it did get back to around that 14,500, which is where we've opened the week. So Bitcoin at 14,500 is in for an interesting week, like I said, because the first of the big futures exchanges there in the US will kick off in half an hour. Some other talking points. Let's look ahead to this week. Last week we saw Euro drift lower, dollar yen drift higher. That was the call that I made last Monday. So we were bang on the money in that regard, and that was a US dollar strength story playing out. Dragging euro off that recent 18 and change level. Not ridiculously. So this move probably for euro dollar lower probably can go either way this week. But specifically for today as well, just to make a comment here on dollar CAD was a very good reflection here on screen. Dollar CAD, after that big sharp sell down a couple of weeks ago, it recovered almost all of that. So back to 28.50, 28.55 is a really interesting sign for dollar CAD. As an offshoot from that, we had oil recover on Friday as well. So if we grab the oil price, it got back to 57.5 or a bit over, 57.75 before settling down a bit. So generally speaking, no real big standout movers. There was a lot of action in the Asian equities last week. They were very volatile. But in terms of trading today, I'd be looking for some consolidation moves on the back or an extension of the non-farm payroll moves. Good example here, if we look at that Aussie dollar on the 4 hour, it is teetering on that 75 cent brink. Just teetering on the brink of going lower. I've been calling for a long time 74.50 to be a level that we should bottom out at. 74.5 is not far away. From there, I think we are likely to see our close for the year around this 75 cent level. Let's not forget, this is the week we're likely to see a US rate hike. But again, we all know that is pretty well telegraphed in the market. So I'd be looking today for consolidation moves and a continuation of that non-farm payroll move, which should see, I guess, midweek I think will be a lot clearer on direction. There's a lot of wait and see price action in a lot of pairs at the moment. So just quickly before we go, also on the sterling had a stellar move back to 135 last week. Very, very knee-jerky in relation to the Brexit headlines, which is to be expected. I wonder if the bargain hunters will jump back in now that sterling's back under 34. It's at 133.85 as we speak. That could be an interesting one to kick off this week. Any positive headlines out of that area and process and progress for Brexit, we'll see the sterling back towards 135. But for mine, again, today to start your Monday, I think you'll find it's a consolidation sort of phase as we start to digest the exact moves here for the rest of the week leading into the US rate hike. As always, if you guys need a hand, just come through to the dealing desk.